Welcome to Insurtech Rap. For those of you who are new, this is a weekly show designed primarily to build community. As such, a couple of things that I ask. One, if possible, leave your cameras on. It's always good to get a face with the names. Two, please introduce yourself in the chat. Say hi, maybe share your LinkedIn. Feel free to communicate with one another in the chat during the call. This is really about getting to know each other, so don't be shy. And then lastly, engage with the panelists. Feel free to ask questions. To ask questions, it's really easy. You can just take yourself off mute and ask a question. Or if you want, you can go into the Q&A box, which is behind the little more ellipsis, and type in a question. Just don't type it into the chat because it's hard to follow the chat just because it can get a little chatty during the call. Anyways, super excited about this week's show. Before I have our guests introduce themselves, I'm going to first introduce myself. My name is Dave Wechsler. I'm with OMERS Ventures. OMERS is one of the pension funds of Ontario. We typically invest in Series A to Series C companies. I focus on fintech, insurtech, anything fintech, insurtech related. Feel free to reach out. I'm happy to chat. Okay, with that, I am going to add Karn and Dan to the feed here. Got a super interesting and unique topic to talk about today. Reinsurance, blockchain, tokenization, all that kind of good stuff and how it relates to reinsurance specifically. For that, Karn, why don't you introduce yourself first and the company, and then I'll have Dan introduce himself after that.
Yeah, sure. First of all, thanks for hosting us again. Really appreciate it. Yeah, so I'm a serial entrepreneur. I've been out in the wilderness for some time, building a bunch of businesses. I built a business that ended up joining Shopify and was early there. I spent 7 years building an MGA business called Cover. And then, with the pain of doing that, I decided that I wanted to continue on in insurance and build a fully collateralized reinsurance market on chain. Basic idea is if you believe that stablecoins and high quality assets continue to proliferate or become adopted by the mainstream, want to make it really easy for people to pledge those assets to a global capital lake. They can back any insurance company in the world. I don't think there's a better way to do insurance or reinsurance, honestly. Our product is a promise to pay under a set of certain conditions that should be readily observable to all counterparties. And having a computer and being able to look up the capital position of a reinsurer or counterparty at a moment's notice, that's a superpower, and we're bringing that to the fore. We do about 170 million in business. We have about 26 cedents. We're profitable, and this is the beginning of year 3.
Fantastic. Great. Congrats. And welcome back. Dan, you're up next.
Yeah, great to be here. Thanks, Dave. My name's Dan Roberts, CEO of OnRe. Stories got some similarities. For myself, I built a business called Names over the last 6 years, and we really built essentially marketplace infrastructure or blockchain infrastructure for the insurance market to come on chain. So we were the first company out of Bermuda to get both digital asset licensing as well as insurance licensing, and then we would delegate that underwriting authority to different insurance counterparties to run their own book of business on chain. That allowed them to segregate assets and liabilities, access new capital, and engage in verifiable, transparent risk transfer. This recent shift of ours into OnRe is really consolidating all of the lines of business that we could delegate under our insurance license into a single product. So on-chain capital markets, as Karn mentioned, we've got $250 billion of stable assets out in the market. But that capital can now access a single product, collateralized in different yielding stable assets, and that pool itself is tokenized into what we call OnRe, which is the LP token of the pool, fully composable across the digital finance space. So it's kind of bringing the relatively consistent performance of the insurance and reinsurance market to what is currently used by the meme coin world of high liquid DeFi.
Awesome. Okay, so just by way of reminder, probably a lot of people on the discussion don't know a lot about crypto and blockchain, so let's just make sure we don't go too crazy on the concepts there. Let's just start at the basics. So what was the core problem you both were trying to solve in insurance? Dan, why don't you kind of start? Like really boil it down. And why is blockchain good for it, by the way?
Yeah, I mean, the thesis 6 years ago, 2 broad areas we were looking at, and this was early days, there wasn't many of us, Karn included. We were looking at 2 areas. One was how was insurance going to play a role in this new wave of digital asset risks? The world of digital assets and crypto came about. There's lots of different risks in that. How was insurance going to play a role? And it started off as covering, specie cover, cold storage, general as easy to understand and relate to the traditional market as possible. And that's developed over the last 6 years. But what we got more interested in is really how the technology of blockchain would play a role in general risk transfer. And what that tended to relate to was there's a growing amount of digital asset capital that is looking to get to work, and that can fill some of the growing desire or growing demand for a reinsurance capital coming over the next 10 years. It's an $80 billion space. It's pegged at around 2 trillion over the next 10 years. So there's a large capital requirement, and the scale and yes, the speed of scale of digital assets poses a very exciting opportunity for that capital to plug quite a lot of that gap. So we spent most of the time building out capital modeling and the necessary regulatory pieces to be able to transform that capital into insurance. And there's multiple different problems, if you like, or different types of customers and reasons why they would engage in something like this. But the main one was big new pot of capital, big desire for reinsurance coverage, and that there's going to be a few parties that are actually able to connect the two. And you've got two on the call today.
Yep. And Karn, what do you want to add to that? And in particular, is this
Yeah.
changing who participates in insurance markets? Because as Dan said, there's a lot of capital locked up in digital assets. I mean, are we making this more accessible?
Look, so a lot of what Dan said covers this off, but let's just zoom out a little bit, right? I bought reinsurance. I've run an MGA. It's a somewhat opaque process. It's fragmented. It's somewhat inefficient. All that aside, at the highest level, you ask yourself why the insurance and securities market hasn't grown the way that the asset-backed securities market has. The simple reason is that capital providers don't know how to underwrite insurance. The idea of hosting a global capital lake that supports all insurance companies on chain that has direct transparency into the underlying collateral, into the risks in a sanitized way. Transparency begets trust. Trust begets liquidity. Liquidity brings cost of capital down. If you bring cost of capital down, you are now bringing additional capacity into a market that desperately needs it, right? And you can build software around this to kind of enable all of this to happen. That's my high level thinking about this. I also just have I'm betting with my career, and I tend to try to work on things that I think are inevitable. And so if you think about where the puck is going, right? Like there's really nothing special about the capital that is locked up in an insurance company or a reinsurer. There's an expected rate of return, right? A variance around that. The magic is in the smart people that are underwriting and picking risks in the layer above that, right? And so I view this through the lens of like I'm building the plumbing to enable smart people in insurance to be able to do their work and be able to write the products and access a market in a clear way and in a competitive way. That's kind of my North Star.
Okay. And when you talk about products, well, actually, let's say with the question I asked a second ago, which is that democratization. I know Dan is very focused on bringing in smaller investors, although I'm sure you love corporate institutional investors as well. But Karn, is that your thinking as well? Maybe democratization, letting more people participate?
Well, look, I think the reality of capital formation dynamics on chain are actually quite similar to what you'd see off chain, right? Like there are maybe a couple thousand people with all of the assets, practically all of the assets that exist on chain, and they deploy these things in kind of a very specific way into DeFi protocols. Do I see that there? And so naturally, like our first port of call is family offices, institutions, whales. The idea here is get the ball rolling, get capital formation happening, get people comfortable with what we're doing, and retail can kind of percolate in, always subject to the regulatory overhead, any KYC that's necessary, et cetera. But abstract it all away, it is the pathway, right, to let people into this market. But it is going to start with folks who have some familiarity with it and are generally comfortable.
Yeah, and I assume you feel similarly.
Yeah, I mean, in a way, in digital assets, retail has driven the excitement, and then the institutions are coming in en masse. So, but both are able to engage in these products sometimes in slightly different ways. You've got your BlackRocks, Fidelities, Franklin Templeton, et cetera, that are through the door now, and then they're in a sort of roundabout way, going to start driving the adoption of these for a smaller group of investors. Both work hand in hand. As Karn said, these products are built for the regulatory compliant levels that are required. But there is also a largely retail-driven market in decentralized finance that are able to engage in these kinds of products and take a bet behind the bigger guys.
Yeah. And I suspect with Circle's IPO today, more retail investors will be looking as well. Dan, let's talk about the actual. Oh, Chelsea asked a question. Chelsea, would you like to come off mute and actually ask your question? You have to actually. I can't hear you. That's the only thing. We can't hear you. No, such a great opportunity. There you go.
Let me try with my
All right,
phone.
there you go. I hear you.
Back.
Yeah, go for it.
You can hear me?
Yeah, we can. Go for it.
Firm, you are insuring digital assets themselves.
No.
But both no. Quickly for us, we did look. That's probably where I've been confusing. At Names, we looked at digital asset risk as part of a broad, category of risk that we can delegate to underwriters if they want to cover that kind of risk. When we consolidated into a single product, we focus on property catastrophe, travel, other kind of in the digital asset world, they're called real world risks. You have to make the distinction of the real world, but it's really giving this kind of uncorrelated, traditional market, bringing that to these on-chain investors.
The types of folks that are doing digital risks are like Nexus Mutual. I think really highly of them. I think they're directionally correct and they've been able to form capital. Our specific viewpoint was that there's already product market fit. People already buy reinsurance. In our vector of attack is slightly different from OnRe Names. We write program business that is plain vanilla as we can get it. We have a generational opportunity to put together billions of capital on chain. We can't mess it up. And so all of its low volatility business, all of its net cat, everything that you would see programs right otherwise. And we've now got 3 years of profitability doing it. So I think we're starting to validate that thesis.
Underwriting on the chain, anything?
Ask the question again, Chelsea. It's hard to hear you.
Oh, sorry. I don't know what's happening with my volume. So the getting underwritten, say hurricane, peril risk, it's just the smart contract is going on the chain versus a policy that's in policy admin system. Is that the underlying layperson's difference?
Yeah. Think about the elements of the reinsurance treaty as being memorialized on chain. We're not hosting any PII or like policy level data on chain that's just obfuscated. And so, yeah, a big part of what we're doing is building a capital transformer into the ecosystem, and we're providing effectively attestations to the capital that backs those deals and high level details around the risks, right? That's the path of least resistance. I think it would be really, really hard to convince any of our counterparties to do anything much deeper than that, or to do much by way of conducting reinsurance business in a way that they're not comfortable with or accustomed to, right? And so in the collateralized markets, typically speaking, you're issuing letters of credit on top of a set of assets, or you're using Reg 114 trusts to collateralize either to the limit in the case of catastrophic risk or otherwise for other programs. So a lot of it is do business the way that our customers expect to be done, and then subject ourselves to a real-time continuous audit process on chain for transparency purposes.
Stable?
Yeah. So the basis, our capital, I mean, we've raised a bunch of venture, and we also have capital providers or institutions that have supplied us with stable coins that are readily convertible into fiat. And so, again, baby steps into a market that is starting to get accustomed to this, right? We're not collateralizing with Bitcoin. We're not collateralizing with ETH. We're only collateralizing with effectively digital dollars that can be readily redeemable for cash.
Well, thank you, Chelsea. Dan, let's talk about the economics a little bit, because you both offer really innovative returns and kind of programs around it. So, and remember that some people on the call may not even understand what a stable coin is. So let's just start with the really basics of how return is generated for the participant.
Yeah, I guess to Chelsea's question as well, it sort of ties together that the buyer's side, the reinsurance side is really as traditional as it gets. The innovation part is on the capital, the capital formation side, and what people are able to do with their position in that particular pool. For us, 2 weeks ago, we launched the OnRe product. This is a pool of capital that allows those in the on-chain world to deploy USDC into our pool. It's on the Solana blockchain, which is the second largest blockchain in the space. And we essentially, model that pool of capital against our capital requirements, or our solvency model out of Bermuda under the BMA, to be able to place traditional reinsurance business against that capital. The policy limit is in dollars, premiums are in dollars, claims are in dollars, but the capital sits on chain as a mean of, verifying the pool and allowing capital providers to contribute. We tokenize that pool itself. That's the OnRe token that does a number of things. One is it tracks your ownership in that pool. So we have a daily NAV update or a calculation that updates the value of that token every day. And it's called an accumulating token in the world of crypto. And then we've built secondary liquidity against that token, or I say we, other parties have provided secondary liquidity in the digital, decentralized finance space, so that users who are coming in can trade 24/7 in and out of that position. Doesn't change the amount of capital that we hold, on our balance sheet to write insurance business, but it does give a, much more liquid version of, insurance position for people to enter and exit. And then a kind of step beyond that is by integrating the OnRe token with a lending protocol, for example, people can actually lend against or lend out that position or borrow against that position, or they can leverage that position, do their decentralized finance activities with that position. Again, it doesn't affect the collateral that we hold and therefore the reinsurance limits that we're able to write. We run quarterly redemptions out of that pool as much as we're able to facilitate. And the solvency model that I mentioned really just takes into account the FX risk, credit risk, counterparty risk of these stable assets, so that we can spit out a dollar number and write the insurance business all in dollars. As Karn mentioned, make it as simple and traditionally facing as it already is. And so your return basically comes from just sheer fact of holding the OnRe token and that NAV price increasing by our underwriting performance plus the collateral asset that we're holding, which is currently USDE. That's the third largest stable asset in crypto.
Okay, that was great. And Alan just asked a really basic question, which Karn, I think you should take. Let's just really articulate what is the problem that you guys are trying to solve.
Yeah, if I could, I'd caveat that by saying I probably should have taken the Crypto for Dummies course before this.
Well, but Alan, I think you're over engineering it. Like these guys are not trying to solve a crypto problem. They're trying to solve a reinsurance problem.
Yeah. At the highest level, grow global insurance capacity. That's the thing that we're doing. And the means to doing that is tapping a new asset class. And the constraints around that are the expectations that asset class are around transparency, both in like how the assets are held and the performance of the work we're doing with those underlying assets. That is at the highest level what we're doing.
Yeah, and absolutely right. If I take the other side of the market for what it's worth, there is a growing decentralized finance ecosystem of investors and traders and so forth that are using yielding products in their own trading strategies. Often they are very tied to, they're very correlated to the blowing winds of crypto, the bull markets, the bear markets. We think, along with the RE team, we're bringing a much more consistent, uncorrelated asset to that space, so that bull or bear market, these kinds of competitive yields exist in that decentralized finance DeFi world. So there's a problem on the capital side, which I think is very powerful as well, which is almost feeds the reason why, the problem being solved that Karn mentioned, where that's going to come from. You solve a problem for this big capital base, that's what leads to the capital gap being filled on the buyer's side, on the reinsurance side.
Yeah, outside of all the efficiency gains of the way that these guys are going to market, the most fundamental thing is bringing more capacity into risk markets, like, end the story. But beyond that, I suspect the story in 5 years is going to be what a better way to place risk, manage risk, to make payouts. But generally right now, it's just about increasing capacity. So Chelsea just asked another question. What's your lead generation strategy for people who are in digital assets? So how are you going out to market and getting people to participate? Karn, you want to start with that?
Yeah, sure. Look, I mean, part of this has been like, I'm a plumber, right? Like I build plumbing, and I tend to try to surround myself with people who have built meaningfully sized businesses and understand this space better than me, right? And part of the reason we were awarded a license to be able to do what we're doing, part of the reason why we've been given the regulatory leeway to attempt and experiment, poke and prod. And so we've got a bunch of really competent folks around the table with us. One of the former CEOs of Willis program business, a bunch of folks who started off at Greenlight and places like that. They control the underwriting. They have existing relationships. I also spent 7 years in the MJ space, so like bootstrapped off of this into direct relationships and playing really nicely with existing distribution. So we work with practically every reinsurance broker in the world at this point, and receive deal flow from them. Not you can't open up a battle on too many fronts, and I think anyone who enters a space with the idea that like they're going to displace everyone or overturn everything is just going to land flat on their behinds, right? And so again, very, very, very similar to how other folks do business on the front end. The innovation is largely on the back.
And from a regulatory perspective, Dan, well, you both have mentioned this a couple of times, but talk about kind of give clarity to the audience that this is a fully licensed, very highly regulated component of the business. Why don't you talk to that a little bit?
Yeah, I mean, our story, under the name Names was we were 2 years in the sandbox in Bermuda, both on the Digital Asset Business Act license and on the Innovative General Business Insurer license. At the time, it was a Class M license for digital assets. It's just a modified license. You now have a Class T, which is an even earlier stage, lighter license in the sandbox. 2022 graduated to the full licenses of both. Bermuda as one of the jurisdictions has been obviously it's a large jurisdiction for reinsurance, but has been, very forward on the digital assets side of things. Coinbase has reared its head there since 2022. That's brought in a lot of additional interest from, the likes of Near and Kraken, and, the general crypto market is seeing Bermuda as one of the leading digital asset jurisdictions. What I would also say is, particularly what I like about the Bermuda jurisdiction is because of their strength in insurance, we're able to apply insurance concepts to digital asset legislation. So one that I've mentioned already is the Bermuda Solvency Capital Requirement model. There's specific categories for digital assets within this model that allows reinsurers to price their collateral on their balance sheet. So that's been a long journey, not something that you can just do overnight. And we've been part of the precedence setting and the iteration of these kinds of tools with the regulators. Lots of progress has been made in that regard from us and some other companies in the jurisdiction. Karn, I imagine you've gone through similar pieces as well.
Yeah, look, like we're doing things that people haven't done before, right? So in a regulated environment where we need to keep the regulator abreast of what we're up to and, be sure that in the substance and spirit of what we're up to, it's empowering the regulator, right? And if you think about what we are actually doing, making it really, really easy to peek behind the curtain and understand what our capital position or solvency looks like. Big part of what the regulator needs to do, right? I think everything goes this way over time. I think actually all insurance and reinsurance ends up on chain, simply because it's actually good from a regulatory perspective, and from a market stability perspective for it to be conducted this way.
What's kind of the killer out there? Is it like speed? Is it efficiency, transparency? I mean, I guess all of the above, but where do you think markets are going to say like, holy smokes, this is a much better way to do it?
Yeah, so look, I only believe in incentives, right? I don't believe that you can convince existing incumbents or existing reinsurers like rewrite all of the deals they're on into smart contracts and start like tapping, kind of internet capital markets. It has to be kind of built from scratch. And if you get to build from scratch at the inflection point at which we exist, where crypto rails and AI rails are coming together, you have an opportunity to build probably the highest operating leverage reinsurer and insurance companies to have ever existed. We're 9 people. We print. And so, and I don't see why we couldn't manage a multi-billion-dollar book with scarcely more resources than we have. And so like, that's the future.
Agree 100%. Dan, you want to add to that at all?
I'll add the regulatory side is some of the questions that, are asked of going through a full licensing process with the regulators are almost moot points now with this kind of technology, things about reporting. Might not be the killer app that moves a commercial industry on chain, but we were talking about regulation. This technology fits so nicely into giving regulators and other counterparties seamless access to what's going on in real time at all times. That's a baseline that I think the world will come to require and lean into, but it might not be the thing that leads the change.
Okay, so I usually ask everybody to kind of give me final words for insurance entrepreneurs, but before we do this, I just want to say you guys are really the champions. I think you're pioneering in so many ways. This is so risky what you're doing, and it's a hard battle. You've both been at it for a while, but it's awesome where both the crypto, blockchain, and insurance markets are heading. So kudos to you both. I think you both deserve a lot of credit. Dan, any advice for entrepreneurs going through this in the insurtech world?
Already in the insurtech world
Yeah.
and want to consider blockchain?
In general, being an insurtech entrepreneur, broader.
Yeah, keep going, and if you're not there yet, start. Join a team as well. You know, people are hiring, and yeah, there's all sorts of things going on. And I think maybe get involved in a company that's existing, and then leave them immediately and start your own thing. Things can happen quickly, and a lot of precedence has been set for that. So there's a somewhat trodden path now for people to come and compete against me and Karn. You know.
Karn, on anything?
Yeah, I mean, look, I think you know this, Dave. I don't recommend entrepreneurship. It's not for everyone, right? This is just pain. What Dan and I have had to do is thread a needle for the last couple of years, and you're right. We took extraordinary risks. We worked on an unstructured problem. We came up with a structured solution that's palatable to the market, and now we're kind of moving forward. But that is hard, and the risk-adjusted returns of doing that kind of thing are not good. All of that aside, though, instead of insurtech, if you're an enterprising person, this is probably the best time in history to be risk on, right? Everything's changing. And so it doesn't need to be insurtech, but I think if you're willing to bet on yourself, you should.
All right, guys, thanks for taking time. Congrats to you both. And thanks, everyone. We'll see you next week.
Cheers.